Welcome back to the Farm Show here on Westplex Talk 1045. In our last segment, we talked about tips from the Missouri Soybean Association to make your dollar stretch a little bit further. Cost saving tips for 2026. And here in C Block, we're going to walk through the 2026 crop protection market outlook brought to us by Farmers Business Network. Now, if you want to read along or get a copy of the report for yourself, just go to fbn.com. If you don't already have an account with Farmers Business Network, you can create an account and download the 2026 Crop Protection Market Outlook for free. We'll start with the overview, and then, time permitting, we'll hit on a few key active ingredients, what the supply looks like, and what the price looks like. The overall market outlook. While the ag chem market itself is stable, your total input cost for chemicals may rise next season. The ag chem industry has cleared excess inventory, stabilizing the spot market. However, this stability is fragile due to heavy reliance on a few overseas manufacturing hubs and ongoing global geopolitical events. Logistical efficiency is the potential future vulnerability, not manufacturing. Recommended next steps. Factor in an increase in your overall chemical budget for the 2026 season compared to 2025. Finalize your purchase plans early to ensure your order is placed in the shipping queue well ahead of spring. FBN goes on to comment on price stability. Key takeaways. Prices for most key active ingredients are likely to be relatively consistent with the 2025 season as global supply has stabilized. Avoid buying in season if possible. Recommended next steps. Lock in prices for foundational products like atrazine and S-metolachlor early to avoid unexpected market fluctuations, especially timed around planting. What about tariff risks? FBN says key imported AIs, including 2,4-D ester, glyphosate, and glufosinate, face the biggest risk of price spikes due to potential new or increased duties on imports from primary manufacturing countries. Recommended next steps. Consider securing volume for these specific products earlier than usual to hedge against a mid-season price jump. What about total input costs? Total operating costs, chemistry, seed, fertilizer, labor, repairs, are projected to be 4 to 6% higher for the 2026 crop compared to 2025. While chemical prices are stable, other major inputs are pushing up total production costs. Recommended next steps? Tightly manage all input costs outside of chem. For example, nitrogen efficiency, equipment maintenance, to protect your margins. This also reinforces the need to buy chem early to minimize cost increases. Overall, purchasing strategy. FBN recommends buy early. Prices for ag chem products typically dip in the fall and peak in season in alignment with the seasonal dynamics of global shipping and logistics. Fall is an economically savvy time to review price trends and consider buying early for the upcoming season to avoid 3 major in-season uncertainties. The first uncertainty, price volatility and spikes. The highest price volatility and price increases occur May to July when market demand is at its peak, and weather, pest outbreaks, or demand surges can quickly drive prices higher. The second uncertainty, supply risk. While the market is relatively stable, unforeseen events like port delays or production issues can cause supply shortages. Freight prices may also increase due to a new 25% tariff on imported medium and heavy-duty trucks beginning on November 1st, today, which, combined with volatile gas prices and driver shortages, may lead carriers to raise rates during the busy holiday season. And the third major in-season uncertainty, logistical bottlenecks. Due to increased risk, many companies are delaying chem purchases, reducing volumes, or not supplying certain AIs this year. This trend is amplified by the fact that, regardless of current market volatility, the ag chem supply chain is always stretched thin during spring planting and spraying. Buying in season increases the risk of delays, meaning you may not get the products you need in time to meet a crucial spray window. Another recommendation, buy strategically. Instead of trying to time the chem market or focusing on cost as your purchasing driver, prioritize your 2026 agronomic strategy when selecting products. Another recommendation, buy economically. Given the cost of capital in today's high interest rate environment, look for savings opportunities like 0% interest financing or other discount offers to optimize your financial position going into next season. If you're just joining us, we are walking through the 2026 Crop Protection Market Outlook by Farmers Business Network. You can find it by going to fbn.com. If you're not already a member of the community, you can sign up. You can even check out the forums. I'd recommend checking out the topics and the discussion started by Colin Pennington. He's the Senior Product Marketing Manager at FBN, a Missouri resident, longtime veteran of Monsanto/Bayer, came from the Brighton agency. And one of the coolest things that Colin has up is corn yield expectations. We know that USDA is not updating any of their numbers, at least not that we can see, because of this government shutdown. And FBN has really filled the void with a lot of their polls and a lot of the data that they're gathering from growers. Again, you can find this report by going to fbn.com and looking for the 2026 Crop Protection Market Outlook. FBN explains some of the numbers that we'll talk about momentarily. Insights are based on FBN member-submitted invoices and FBN proprietary data. By examining chem price trends over the last roughly 10 years, this 2026 report predicts pricing and availability expectations for 5 key AIs. Now, we'll just go through the highlights of 3 of the key AIs today. We'll go through glyphosate, glufosinate, and 2,4-D ester. Let's start with glyphosate. Price expectation, overall, price is likely to increase. Supply expectation overall, likely to decrease. Here's what FBN says. The global glyphosate market is currently navigating a period of volatility, with recent price increases and significant long-term uncertainties affecting availability. After a prolonged period of low prices, the market is beginning to correct. This upward trend is a direct result of strong demand, particularly in the North and South America, and destocking of low-priced inventory, with importers now actively restocking to meet demand. Considering 99% of glyphosate is produced outside the U.S., reliance on Chinese imports is very high and leads to significant risk from ongoing trade policy changes. The U.S.-China trade war has already imposed an additional 10% tariff on Chinese goods, which could impact prices for key agricultural chem, including glyphosate. Additional future tariffs, the details of which change frequently, could see rates increase to 60% or more for finished goods, which would have a severe and immediate impact on the cost and availability of goods. This persistent geopolitical tension acts as a significant headwind. The folks from FBN also break down state by state versus national price trends. And in the state of Missouri, we have a 9% difference from the national price. In other words, we have a 9% increase versus the national price trend. Next up, glufosinate outlook. Overall, FBN says price expectation likely to increase. Supply expectation stable. FBN says the market for glufosinate is poised for significant price volatility and potential availability concerns, primarily due to sourcing and a lack of domestic production in the U.S. With 85% of glufosinate imported from China, 10% from India, and 5% from Germany, the U.S. market is highly susceptible to disruptions from tariffs and geopolitical tensions. While there is still pre-tariff product in the channel due to a high level of imports in early 2025, expect prices to increase through 2026 as this is depleted. Recent U.S. tariffs have added cost and complexity to the supply chain, including a 10% tariff on Chinese goods. Additional future tariffs on Chinese products may further increase price and availability, though details are still being finalized. Reliance on foreign suppliers and the potential for escalating trade tensions mean the market must rely on higher cost alternative sources to absorb tariff shocks, leading to sustained price pressures. This vulnerability comes at a time of robust global demand for glufosinate, driven by its critical use as an alternative to glyphosate and paraquat as weed resistance spreads. FBN once again compared Missouri price trends to national trends. And in Missouri, we have a 14% delta. That means a 14% increase compared to national price. Third, and we'll wrap up today with 2,4-D, the 2,4-D ester outlook. The folks at FBN say price expectation likely to increase, supply expectation likely to decrease. 2,4-D prices will likely rise, and availability may become increasingly constrained as a result of new trade policies. Newly determined anti-dumping and countervailing duties on imports from China and India, which historically supplied 81% of the U.S. generic market, will drive a sharp price increase in the short term. Costs for generic 2,4-D products had already doubled locally in some areas in anticipation of the May 2025 ruling. The final duties are substantial, with some Chinese exporters facing rates as high as 127.21% for dumping and 169.63% for subsidies. Because domestic U.S. production of 2,4-D is limited, the market must now pivot to sourcing from other regions or rely on new domestic capacity that cannot yet meet demand. While major generic suppliers do not anticipate outright product shortages, alternative sourcing is more expensive and will likely add extra costs for generic 2,4-D products in 2026. Now, finally, some good news for Missouri growers. Compared to the national trend, Missouri 2,4-D prices look to be 14% cheaper than the average national price. Again, you can find this report by going to fbn.com. You will also find FBN's analysis and outlook for atrazine as well as S-metolachlor. And that is all the time we have for this edition of the Farm Show on Westplex Talk 104.5. We will be back in 2 weeks. Next week, on November 8th, we will be playing an encore presentation of this very show. To steal a phrase from my friend Scott Fawn, who borrowed a phrase from the late Jack Buck. I will be on assignment next week, but you can always catch us on Facebook at Farm Show Radio. You can always catch us on Instagram at Farm Show Radio. And you can always listen to past episodes on YouTube at, you guessed it, Farm Show Radio. Thanks for joining us this week. We will be back in 2 weeks. See you then.